Hi, everyone. Good afternoon and welcome to today's session. Today, we're going to be discussing the innovative financing for a more equitable future. And we have great people on the panel today to share their views and their experience in this space with us. We'll probably start by introducing our panelists. But before we get to that, I just want to remind you that this is an interactive session and you can share your questions with us using Slido. Just use the code SFF 2023 and choose the track Innovative Approaches to Finance. So let's get started. To meet our panelists, we'll start with Jenny. Jenny, please introduce yourself.
Thanks, Tunde. Thanks for having me today at the Social Finance Forum. It's really exciting to talk to everyone and talk about innovative financing. My name is Jenny. I work at the Duca Impact Lab. I'm the program lead there. We handle I handle the daily operations of our Keystone project, the escalator loan. And at the Impact Lab, what we are rooted in is trying to create a fair banking system for all. So what we do is we create these experiments and these projects where we try to scale up novel, innovative financing and social financing projects. So it's very apt that we're speaking here today. As well, I just want to say it's really exciting to talk about innovative financing. It's a pretty novel space. And so when I think about the term innovative financing, I try to think about how people interact with banking day to day. It is a core aspect of our day-to-day lives. And when I think about innovative financing, I think about something that is radically transparent, easy, simple, accessible. When I think about banking and innovative financing, I try to think of what's a banking system would look like if all we're trying to do, if the main goal we're trying to do is either solve a problem or create an opportunity for people. So that's what I think about when I think about innovative financing.
Thank you. Thank you so much, Jenny. Graham?
Hi, everyone. My name is Graham Day. I am the Chief Investment Officer at Spring. I'm also a managing partner at a new fund we're launching, Spring Impact Capital. Spring exists to change the world through innovation. We've been an accelerator for many years, and most recently, we've been also working on the investor side for investor education for impact and social finance. So it's been an exciting time. Thank you so much for the invitation, I should say, and looking forward to hearing from everyone else on this panel for this topic. For us and for me, innovative financing, and Jenny had some great points already. We operate across sort of debt and equity and investing in companies, not just lending to individuals. So but a broader sense for us. And when I think of innovative financing, I think about how to increase accessibility in a way that's sustainable and fair, and ultimately kind of aligns objectives to drive certain social objectives. So anything that falls in that sphere to me is innovative.
Thank you so much. Eloise?
Hi, my name is Eloise Duncan. I'm the CEO and founder of Financial Resilience Institute. We're a not-for-profit working to help improve the financial resilience and well-being of all Canadians, including in particular those who are more financially vulnerable or underserved. I've also the creator of the Financial Resilience Index, which measures a household's financial resilience across 9 sentiment, behavioral and resilience indicators. So thrilled to be here. Thank you so much for the invitation. When I think about innovative finance, I think about it through the lens of helping different populations to solve unique needs or pain points. I think about fostering financial inclusion and empowerment. I think about opportunities to build financial resilience with financing one component within a much wider spectrum. I think about opportunities to support people beyond thinking just about their traditional assets or leveraging traditional metrics like credit scores, knowing that people have unique challenges. We have newcomers, we have many different people who have unique needs, may have social capital, etc. And I also think about it from the lens of small business owners, not-for-profits and social enterprises like our organization, and through the personal lens. So there's very much an opportunity to think about financing through those lenses, and as Graham said, to ultimately drive positive social outcomes as well as positive outcomes for customers and for organizations.
Thank you, Elise. Thank you for sharing that. Sarah.
So I'm Sarah Stewie. I'm the Associate Director of Philanthropy at Windmill Microlending. So in my role, I raise funds from donors, so through donations, and then also through our impact investment. And both of those tools, our donations and our impact investment, fund the loan capital that we lend out to skilled newcomers. The goal of Windmill Microlending is to provide loans to skilled newcomers and refugees who require reaccreditation, training, or upskilling so that they can achieve career success in Canada. And for me, innovative financing is flowing funds into the hands of excluded communities, such as newcomers, also, Indigenous folks, for example, through, Raven Indigenous Impact Funds, or, FACE Coalition that's doing similar work in the Black entrepreneurship space.
Thank you so much. Thank you for introducing yourselves and telling us what innovative finance means to you. I'll probably start with you, Sarah. The first question I have is, finance be innovative to empower marginalized communities?
Yeah, so as I mentioned, like many of the organizations on the panel, Windmill's goal is to provide access to finance to traditionally excluded communities. So for us specifically, that means newcomers and refugees. And so one of the ways that we raise the funds that we lend out to our clients is through our community bond. And it was interesting to hear Jory's comments this morning about less than market rates of returns, because in the last 4 years, we've raised about $20 million from impact investors, many of whom are, participating in the Social Finance Forum today. And we provide our investors with a less than market rate of return. A lot of our investors invested at sort of 1.8%, 2%, 2.5%. And the reason that they've done that is because they see that the impact that they get through a Windmill community bond sort of makes up for that the less than market rate of return. And one of our funders actually described Windmill as providing private banking to a community that does not traditionally get that level of customer service, care, or attention from a big bank, which we think is a nice way of looking at it. So we work with our newcomer clients, and we make sure that they've got a learning plan that makes sense, and they take the funds that we lend to them and they pay for training and reaccreditation. And on average, our clients triple their income by the time they pay back their loans. We've made a couple innovations recently that it might be interesting to share. So in 2022, we heard from a lot of our clients that they were uncomfortable taking a loan because we had a variable rate at the time. And there were so many interest rate hikes in 2022. And also most recently, there was an interest rate hike. So we heard that they were uncomfortable taking a Windmill loan because they were worried about, what interest rate it could end up being. And so in response to that, we actually launched a fixed interest rate product for the first time in our history, capping interest at 5.9% for our newcomer clients. And the reason that we were able to do this is because we have access to a pool both of donated loan capital and also low interest loan capital through our donors and our community bond. And we're also now looking at creating a non-interest bearing loan product to increase our accessibility and financial inclusion for newcomers to Canada who are averse to using interest-bearing loan products because of religious or cultural beliefs. So in lieu of interest, Windmill will charge a predetermined fee that is affordable and comparable to the interest that's charged on our conventional loans. And just to say again, we're one specific example of a non-traditional lender providing funds to excluded groups, but there's lots of others like us, like Raven, FACE Coalition, and other groups like that.
Thank you very much. I mean, that's very, very nice to hear. And I know, Eloise, you have something similar. You've worked with these groups. I don't know if you want to maybe add some more to what you think about innovative finance to empower marginalized communities.
Yeah, so no, it's fantastic to hear about those wonderful innovations. I mean, through the Institute, we're measuring the financial vulnerability of Canadians and some of the populations that we talked about, so Indigenous Canadians, racialized Canadians, newcomers, those who are most financially vulnerable based on their index score. And we are measuring lots of financial inclusion and access to capital and access to credit and debt manageability challenges. So what we see from our data is there's a lot of challenges specifically for populations that are more financially vulnerable. And there are a lot of unique needs that need to be met by financial institutions and the wider ecosystem to support those to support those households as appropriate. I mean, I think when it comes to financing, there's just many different ways that this can be carved out, and we need to take an intersectional lens to look at different types of populations and what their unique needs are. But we also need to help people move along the curve and improve their financial resilience through their lives and support people through planned and unplanned life events. So I do see financial institutions, both traditional and non-traditional, as well as the wider ecosystem, having a really important role to play in terms of helping people, not only from a financing perspective, but in terms of their wider financial lives and decisions, knowing that there are a lot of complex challenges that people need to solve. When it comes to the interest rates, we are very much measuring the impact of not only the high cost of living environment, but rising interest rates on Canadians and those who are most financially vulnerable and or over leveraged. And we absolutely see increased challenges on the horizon in the next couple of indices as things unfold. And some people are impacted by things like their mortgage doubling. There are people having to resort to predatory financial services, payday loans, and other such products, which we're measuring. And all of those things can set people back.
Thank you so much. I mean, it's very, very nice that we think about these individuals. I mean, going back to the social enterprises on the other side, these are people that are innovating, that are creating new ideas to address the gaps. Graham, what do you think is the role of innovative financing in bridging the financing gaps for the social enterprises?
Thanks for the question. It's an exciting space because I think the industry has moved on to find a lot of creative solutions there. You know, traditionally, you think of the building blocks of finance for an organization, which would be grants, loans, and then equity for private companies, right? And there's a lot of fertile ground between those, and we're only limited kind of by our creativity and how we can kind of blend those together. And I think if they're well designed, you can increase both access and drive more impact through alignment. For some of you might know the book Adventure Finance by Ani Patton Power. That's a really interesting book to look up, which goes through a variety of these tools. And at Spring, we're very passionate about looking for them. So I'll give a couple of examples. If you blend, for example, grant and debt, there's a variety of things you can do. One of the ones that I'm quite interested in is repayable grants. And what I've seen in a previous organization, social enterprise I worked for, we were given a large grant to open an entire new office in Eastern Africa. We were working with smallholder farmers with agricultural technologies. And that grant was a kind of a risk-free way of us building out to that market. And what was written into it is if things went really well there and we hit a certain revenue mark over a certain number of years, a portion of that grant was to be repaid. And the concept was like the regenerative concept of pushing back that money to the donor so it can be re-lent out. And so I think that that's interesting intersection. At Spring, we see a lot more of the intersection between debt and equity, or loans and equity. So one example there is a structure called redeemable equity, where you as the investor can invest in a social enterprise or an impact company that maybe not on the path for a sale in the near term. The founder might not want to. It may be a business that's going to run in perpetuity. And so redeemable equity means the investor can come in, buy a portion of the company for a portion of time, but have a prearranged way for the investor to get paid back with or without return. That depends on how you want to structure it. And that, opens up, that provides social enterprise with a whole new kind of tool to do it. Spring itself was actually founded or funded with a redeemable equity instrument. So we're trying to walk the talk on that as well. And just a final example would be revenue-backed financing. So when you invest in a social enterprise or a company and you then get paid back a portion of the revenues that are generated. So your interests are super aligned with the success of that company, and you're only getting kind of paid back as they grow, which protects them and protects you. And some great organizations working in that. Christy was on the opening panel there from Thrive Impact Fund, which is doing some great work there, amongst others. So lots to dig into, talk about it forever, but yeah, those are some initial thoughts.
Thank you so much. I mean, it's good to hear about these innovations going on to address the problem, to ensure that we continue to, address the financing gap. Jenny, maybe I'll come to you now. Can you share some examples of innovative financing approaches that have been successful for your organization to drive this positive change?
Absolutely. Thanks for the question. So at the Impact Lab, at the Duca Impact Lab, our keystone project right now is the escalator loan. And so the idea of the escalator loan is we're trying to help individuals who have kind of fallen into the predatory loan cycle. And if you know anything about payday loans, once you pay one off, you almost immediately have to get another one just to ensure that you pay off your bills and everything like that. And as we know, the cost of living has increased. And so we're finding that there's an uptick of individuals taking out predatory loans. So with the escalator loan, what we do is we pay off these loans for individuals, and we don't look at their credit score. We collect them, but our credit adjudication isn't based off mainstream credit metrics. We're not going to say yes or no based off of your credit score. We're looking primarily at cash flow. What we've noticed that there are a lot of individuals who have full-time jobs, who have a sustainable income. However, once you're in the predatory loan cycle, no matter how much you're making, you're still going to have to keep taking out these payday loans. And so we kind of clear that debt for them. We give them a much more affordable debt loan at a rate of prime plus 8. And then we also give them a few tools about budgeting. We take a look at their household budget. We try to inform them about, basic cash flow, provide some financial literacy. We open up a Duca bank account if they don't already have one. And so having that one-on-one relationship allows them to ask us questions and to seek advice with a credit union and someone that they know that they can trust versus, going out to your corner cash money or whatever it is, right? And so what we have found in this experience is that the escalator loan has provided so many opportunities for people to flourish in other aspects of their life because they're no longer paying 40 or 50% interest on their loan. They're able to reinvest that income or that money into their children's education. We've noticed that a lot of people have been able to stabilize their finances, especially if they have just left a bad relationship. There are a lot of single moms who are able to, secure after school activities for their children. And it kind of proves the point that, finances are a very key social determinant of health. And once we're able to secure that foundation and kind of allow people to take that stress out of their mind, they're able to reinvest that money and flourish in other areas of health. So mental health has improved. Perhaps more attention has been brought to physical health. Things like that are often, considered a variable expense. If you might not think about putting your kid in after-school activities if you don't have the money, if you know that you're constantly having to pay back these payday loans. And so reducing that financial stress has been a huge positive change. Not only for individuals and their lives, but if you consider that means that there might be less need for social dependence in other areas of like government support or anything like that. We've also noticed that there are a lot of individuals who apply for the escalator loan that are women of color, single moms. A majority of our borrowers are actually female, and stabilizing finances is a key foundation to moving forward and flourishing in any other aspect of your life. And the same goes for a lot of other marginalized groups. A large number of our applicants are also individuals who are relying on OAS and CPP and are prey victim to payday lenders and predatory lenders who are then taking out their entire month's income. And as we know, perhaps OAS and CPP is not enough for everyone to live sustainably month to month. So we're able to clear that debt for them, give them peace of mind, give them a leg up for more financial security moving forward. And so there are a lot of positive changes that we can measure that way. And we're continuing to collaborate with other organizations to measure that social return.
Thank you very much, Jenny. And I saw Sarah's reaction to some of those things you said. I don't know if Sarah wants to share something here as well.
Yeah, sure. Thanks, Jenny. It's just great to hear like the other sort of creative ways that loans are being used. So that was really interesting for me to hear as well. So I'll talk a little bit about windmill microlending as an example of a success story. So we've approved almost 9,000 loans to newcomers across Canada since 2005, and about 30% of that 9,000 loans have been approved in the last 2.5 years. So we're really starting to scale. We saw 31% year-over-year growth comparing our last financial year to this financial year. And on average, our clients triple their income by the time they repay their loan. And our repayment rate has been 97% plus since inception, since 2005. About half of our clients are working to reaccredit in healthcare professions. And I just want to briefly share the story of one of our former clients, Omar, who really generously shared his story with Windmill's team, just to sort of illustrate some of the way that innovative finance played a role in his success story in Canada, but also the challenges that he continued to face. And just to highlight the fact that we're not saying that a windmill loan is a cure-all for all of the challenges that newcomers face when they arrive in Canada. There are still issues around systemic racism and the issues still of requiring Canadian experience when folks apply for jobs. And I'm sure that there are lots of people on the call who are newcomers themselves who have lived that experience. So just want to acknowledge that. So Omar is a licensed pharmacist, and he left Egypt to give his children a better future. And like many newcomers, he brought savings to Canada, but those lasted only a few months. He probably expected that he would be able to earn a higher salary in Canada than he was able to, based on the fact that he got into Canada and he got his visa based on his education and all of his experience. But then when he arrived in Canada, he realized that the exact credentials that fast-tracked him into Canada are not recognized. His only option was to take a survival job to support his family. He worked a variety of jobs, including long shifts as a security guard. And he told us, quote, "I felt like I could do a lot more, but I wasn't allowed. I had to work from 6 p.m. to 6 a.m., which was difficult and really affected my family." So he realized that he needed to find a way of getting his pharmacy license. And he had no assets and no credit history in Canada as a newcomer. And he told us, "I went to a bank about a student loan and they refused, saying I was not a student. I already had my degree." So one afternoon, Omar saw an advertisement for Windmill on a bus. He decided to visit our website. He filled out a loan application. And this was not an application that he expected to get approved for because the bank had just turned him down. He provided all the documentation that the Windmill team asked for and waited to see what would happen. And then his loan was approved, and he actually couldn't believe it. And he told us it was really helpful. And quote, "Paying $2,500 for an exam was tough, but paying it back in reasonable amounts helped." And he also said, "It helped me build my credit history." When Omar got his pharmacy license, after lots and lots of hard work on his behalf, relicensing as a pharmacist is very challenging and the exams are very, very difficult. He said, "It felt like a huge weight was removed from his shoulders. I could demonstrate my experience and show that I deserve to work in this profession." But even after getting his pharmacy license, he was still surprised that he still needed Canadian experience to advance in his career. So he actually started as a part-time pharmacist and then gradually became a full-time pharmacist. And today he's a pharmacy manager. So he has returned to his profession, but it took a lot more time than he realized, even with the role that Windmill and innovative financing played in his success. So just to highlight that the requirement to have Canadian experience is an issue that lots of newcomers face, whether it's stated outright by a regulatory body or as a more covert hiring practice, even if someone has completed their licensing process. The Ontario government recently dropped the Canadian work experience requirement for internationally trained engineers, which Windmill welcomed as a move. There is also the issue that he found out about us because he saw an advertisement on a bus. Windmill is really intentional around where we place our advertisements, making sure that they're in areas where there are lots of newcomers. But it would make a lot more sense if the government told newcomers who arrive in Canada that there is an organization that can help them if they are interested in getting a loan to getting back into their career. So there isn't this sort of happenstance element, which we find in so many of our success stories. There is a national shortage of pharmacists in Canada. There's a national shortage of pretty much all of the professions that our clients are working to reaccredit in. So we want to scale that so that we can create more of these success stories, but there's other factors other than just the innovative financing.
Thank you, Sarah. Thank you for sharing Omar's story. I mean, it's great to see how being innovative can, help people resettle when they come to Canada and other things we can do. So I know we've spoken a lot about the debt side of things. I'll come to you, Graham, now. Probably if you can share some of the strategies of other diverse ways which finance can be catalyst for social change.
Yeah, thanks. And just to say, like, this is such a great showcase of why storytelling is so important. That was so inspiring to hear. Yeah, so for some other thoughts on strategies and showcases, Spring, we really believe that we need to democratize finance more. We need finance and the sources of that, or the supply, to use some of the terminology that they were talking about in the first panel, needs to be kind of broadened. And I think the more we have more people participating in funding in general, the more diverse that becomes, the better directed that is. And I think the more aligned it'll be to social goals. So I think there's a lot of different ideas out there about how to do this. Crowdfunding has come onto the scene within the last 10 years. An older structure like community investment co-ops are a super interesting structure to look into. Community bonds. Ryan Colin Schwartz from Tapestry was speaking earlier and is around. So a lot of interesting models. At Spring, the example I'll bring is the program we created called the Impact Investor Challenge. And what we did there was, after many years of accelerating and getting companies ready, we started turning our focus to, okay, how do we engage the investor community, or at least, I'll be intentional here, individuals who are interested in investing, who may not actually self-identify as being an angel investor or part of it. And so we reached out to these groups, and we create cohorts of about 25 individuals. Usually a smaller group within that has experience in direct investing. The majority don't. And if the majority of them don't, many of them are unaccredited investors who have never had the opportunity or are allowed to be able to do direct investments into social enterprise or impact companies. And so we bring that group together and show them a showcase of entrepreneurs and founders that we've pre-selected. And then over the course of about 3 months, those groups work together. The investors have all pre-committed capital as low as $2,500 to participate. And that capital pool is about $150,000, sometimes a bit more, and goes into, eventually will be allocated into one of those companies. And so over 3 months that we'll work together on understanding how to do due diligence on these companies, learning about the founders, learning about impact and impact measurement, and how their solution can drive the change that those investors want to see from their own theses. And at the end of the program, there's an investment in one of those. And we've done that now 12 times over the past 2.5 years. So we've trained over 250 investors, and it just seems to be getting bigger and bigger. And we're targeting it at specific sectors like health, like climate. We're also doing it in regions. We're doing one in Atlantic Canada and Quebec. We've worked in the Yukon. And so trying to really broaden that, again, to borrow some comments from the earlier panel about how we need to get out of just the urban sectors, urban centers of Canada, and how can we bring kind of angel investing with an impact lens to more areas. So we're really excited about that. We've backed some very exciting companies, and those companies have credited the program with kickstarting their fundraising campaigns, because in the same way that your example on Omar couldn't get his first loan from a bank, entrepreneurs face that too, that the first person to believe in you is the hardest. And so if you can have a sort of a friendly group that will come together around you, then the next check is easier and easier and easier. And so we've put a bunch of entrepreneurs kind of on an amazing path forward to then scale their social enterprises and businesses because they've got that initial group to believe in them. So something we're very excited about building out. And the fund I work for will now kind of build even on top of that success as well.
Thank you so much for sharing. I mean, to train the investors to be able to bridge that gap is also something that needs to be done. And it's good to know that there is some innovation in that space as well. So I have some questions from the audience. And I think the first one is for you, Sarah. So the question is, since you also solicit donations, how do you distinguish between a donor-directed charitable gift and a non-interest bearing investment?
I'm not sure I completely understand that question, but I'll take a crack at it. So we have two bank accounts at Windmill. So we have an operating funding bank account and a loan capital bank account. And if you make a donation to Loan Capital, it goes into that bank account. And if you make a community bond investment, it goes into that bank account. With our new pilot fund that I mentioned, which is a non-interest bearing loan product, we have created another bank account that does not accrue interest in order to remain compliant with that. So we are very sort of intentional about separating that out. But in terms of our community bond, which earns interest, and our loan capital donations, those sit in the same bank account because they can.
Thank you so much.
If you have a follow-up, happy to answer.
Yes, thank you for that, Sarah. I think this other question is still for you. What do the learning plans include for individuals receiving loans?
So all of our clients, as part of the process towards getting a loan, have the opportunity to meet with a client success coach, and so the meeting with the client success coach is part of the assessment as to whether or not they will receive their loan. And prior to that meeting, the client will go through a client success assessment, which helps to assess, looks at their resume, sees about their confidence in interview skills, and sort of identifies like if there are any, potential areas of opportunity where we could refer the client out to, provide them with some support in those areas. We also offer them the opportunity to connect with a mentor if that would be useful to them. And many of our mentors are Windmill alumni, so clients that have paid back their Windmill loan. If the question is around what the loan is for, so our loans are for training and reaccreditation, and also sort of the life costs that go along with that. So if someone needs to take time off work, so for example, there's one dental exam that is incredibly challenging, and our client success coaches will say, listen, you really need to take the whole month off of work if you're going to challenge this exam. The failure rate is really high. So that's the sort of advice that our coaches will give our clients. And we provide those living expenses costs so folks can take time off work in order to be successful in challenging those exams.
Thank you so much, Sarah. And just to remind the audience that you can keep putting the question in slido.com. Pick the track innovative approaches to finance, and we'll get to the questions. Eloise, I want to come back to you about some of these things we've discussed. There's a common thread that sort of shows that whatever we're doing, there's need for more collaboration in the industry between all stakeholders, the investors, the enterprises, the government. What are your thoughts on how we can drive this collaboration?
Yeah, great question. Thank you, Yatunde. And I'd love to hear what my other panelists think about this as well. But I mean, based on our experience, we feel strongly that cross-sector collaboration is critical to address some of these very complex challenges and social challenges facing Canadians and specific populations. So if we can have, sort of creative partnerships, and the Institute is developing creative partnerships with other institutions, for example, that help to measurably improve the financial resilience of their customers at scale. If we can partner with other not-for-profits, if we can work with and inform policymakers so that they can provide more targeted support to Canadians that are most financially vulnerable, And as Graham said, sort of access to different solutions with partners to support people is very, very powerful. And so I'll just give you one example of a partnership. Anyone can hear me. Oh, that's better. That's excellent. There's a great organization called Prosper Canada that's a different not-for-profit that works. We partnered and we're working measure the financial vulnerability specifically of low-income Canadians and those who are most financially vulnerable. So the index analytics and benchmark data that we're providing is providing a completely different lens on what's going on for low-income and most financially vulnerable Canadians, with that data and those insights being then shared on with the wider financial empowerment sector, other not-for-profits, so that they can provide more targeted support in person and through their agencies to those who are most financially vulnerable. Data also being shared with policymakers to help them provide more targeted support. Right now, obviously, we've got some federal and provincial government affordability programs that are being provided to households, but not necessarily those who need it most. So our data can be used in that way to inform improvements going forward. I think there's also just a ton of opportunity to partner within the financial institution space, also with employers as well, knowing that they have a key role to play in terms of helping to improve the financial resilience and well-being of their employees as well.
Thank you very much.
I'd love to hear what everyone else thinks too on this call.
Yeah, me too. Jenny, do you want to go first?
Sure. That sounds really interesting, everything that you guys are doing, Eloise. I just want to give an example of a collaboration project that we're doing at the Impact Lab. We're working with Social Value Canada and Symmetrica Jacobs to produce a social return on investment sort of framework. So I think we all know there are lots of metrics and ratios and financial quantitative things that we can use to measure value for shareholders. If the ROI is a measurement for shareholders, we want to create an SROI for stakeholders, and really produce a lens into what the value is that our product and any other potential social or innovative finance project could produce, what value it can produce for everybody else. So with our SROI project, we're trying to find ways that $1 investment in our escalator loan, for example, can produce a positive externality, and how can we actually put a number to that positive externality so that we can bring it to other collaborative partners like the government, to other financial institutions, to other credit unions or philanthropists or nonprofit organizations, and be like, look at the value of this product and look at the value of investing in an individual. The escalator loan is so interesting because it is a direct investment into an individual and kind of giving them a rope out of the predatory loan cycle. As I mentioned before, it has allowed people to reinvest in their children, in their own education, to just kind of give them a sigh of relief. And there is a number, I guess, that we could put to what that sigh of relief is. I think everyone can probably relate to the fact that financial stress really has a chokehold on all aspects of your life. And so how can we find a number with that, of like, how can we quantify that, and how can we then sort of package that and talk to governments, and how can we kind of build a more collaborative environment so that we can invest more in social programs. Maybe we can have more grants for things like innovative finance. And this is something that we're doing with Social Value Canada and Symmetrica Jacobs, but there's an opportunity for us to collaborate across all fronts. So we're working with other credit unions also to build this product, but also if anyone out there listening also wants to kind of reach out and collaborate with us, I'm happy to take any emails.
Thank you very much, Jenny. Graham, do you want to add to that?
Just to say that it's so important, the work that I think Eloise, you're doing, and Jenny as well, on creating that data behind it, because I think our sector is sometimes left open to critiques on, to what extent are we moving the needle, and like, what is the cost benefit of it from for whether it be from a government side or foundation side. So being able to have the numbers to help, and a social return on investment, I think it goes a long way to doing that. I also just say, general convening to get people to collaborate and knowledge. It's kind of an obvious answer, but at the same point, we've been kind of interrupted through COVID of what that convening looks like. And on the one hand, convening went online, but it also immediately broke down barriers of place. And so I found myself with the pandemic all of a sudden kind of joining more national work and connected to people across the country that I wouldn't have otherwise been. But at the same time, the relationships either stayed or got shallower because we weren't, together in rooms. And now as we come out of it, I don't know about you guys, but this last few months has just been in person after in-person session. Like, we're all of a sudden deep into it, and I think it feels good. I think we'll come out with the right balance, because these ideas need to be shared, both the data and the storytelling, and as those come together, I think we can pressure policy in the right way, and change behaviors in the right way, to move social objectives forward.
Thank you, Graham. Sarah, I also have a question from the audience for you. So they want to know, do you prioritize investor access to your fund to investors who are alumni, newcomers, or immigrants themselves? Do they have a role in the loan program?
That's a great question. I would love it if we could do that, but unfortunately, we don't have access to so many funds that we really prioritize investor access to anyone in particular. We welcome investments from all folks. Because we are a registered charity, we're also able to accept investments from non-accredited investors because we have a not-for-profit exemption. But absolutely, our alumni have a role in the loan program. So as I mentioned, we have a mentorship program where and some of our mentors are alumni who have gone through the program and, better than anybody understand the challenges that newcomers face when they arrive in Canada and need to reaccredit or retrain in order to achieve career success. And we also have some alumni donors as well to Windmill, which we are really delighted when any alumni who has gone through the program sees the value and wants to sort of pay it forward to a newcomer. And we also have a wonderful entrepreneur, Dapo Bankole, who is based in Calgary, who many years ago got a Windmill loan and now employs 5 members of staff through his IT business in Alberta. So we absolutely, it's a huge priority to have newcomers involved in our work. About half of our staff are newcomers themselves, or the child of newcomers. So it's absolutely something that we are focused on.
Thank you very much. One more question from me. Like anything that is new, innovation is new. You have to try new things, experiment with some things, but then we also have to be careful about the risks that are inherent. So we need to talk about how do we manage this risk so that whatever we're creating, whatever we're developing remains sustainable, remains scalable. Jenny, I'll come to you with that question. Can you share some thoughts on some of the approach we can adopt?
Yeah, absolutely. At Duco, we are a credit union. And so we are just a day-to-day bank for regular individuals who sign up to become a member and to open up a checking account with us. And with that responsibility, we are responsible and accountable for the deposits and the money that they trust us to keep safe. And so with the Impact Lab, what we saw was there was an unmet need in this financial space. There are all these individuals who are going to predatory lenders. There are all these individuals who don't have basic access to financial services. And so what we did was we carved out a space for the Impact Lab within the credit union to sort of contain that risk. And inside the Impact Lab, we're able to do that experimenting, but we're not experimenting with people's money. So members' money is kept safe. The money that we have in the Impact Lab, we can then use to, develop a hypothesis, look for an unmet need, and then create a project like the escalator loan and then develop a proof of concept. Once we have that proof of concept, the idea is that we have all of this data now. We know what the real risk is. We know what the social value is. We know what the financial value is. And then we can bring that to the mainstream credit union and potentially other credit unions to collaborate to say, this is what is actually like possible with this concept. And so the Impact Lab is a way to sort of scale these really innovative finance ideas without risking real members' money. And so it's an interesting space that we would hope that other credit unions want to collaborate with us with and kind of take a look at what is possible, what other unmet needs are there in the community, especially as Duca is a regional credit union. Like, we can look out our backyard, what in the GTA, what in the Greater Toronto area and Toronto and Southern Ontario in general, what are the unmet needs and how can we address this community with a very empathetic and radical kind of ideas, but without risking all the other individuals who trust us with their deposits and their retirement and their savings accounts.
Thank you, Jenny. One more question from the audience, and I can take this to Eloise. How do you set aside resources for marketing? What kind of acquisition cost are you seeing to attract new stakeholders?
So just to check the question, so someone's asking about marketing investment by the Institute to engage stakeholders. Yeah, great question. Well, so the Financial Resilience Institute is a new not-for-profit. We were only founded in September of last year. And this is very much a build on around 7 or 8 years of work through my social enterprise that I founded a number of years ago. We're talking about innovative financing thanks to Van City Savings Credit Union that recognized that the index I've created needs to be levered as a community asset for good. We were very lucky to receive grant funding and support to help bring the Institute to life as a not-for-profit to drive positive change at scale. But we're very much in startup mode as it relates to marketing and relationship building. We are working with committed organizations, purpose-driven organizations that are using the index to measure and improve the financial health and well-being of their customers at scale. And we do provide advisory services and strategic consulting in this whole area. So, but going back to the question of marketing, we have very, very limited budget for marketing. Everything is very much word of mouth. We are going to be launching a free financial resilience score tool for everyone later in the year, because the index measures household financial resilience right down to the individual level. We have minimal budget, minimal marketing money for that. So we're very much open to partnerships and to piloting. Love the work that Duca does and other organizations do. And I think we're just hoping that over time, there will be word of mouth and more funds for marketing going forward. But everything we're doing is very grassroots. And as for the cost of acquisition, I just cannot answer that question. Some of the organizations that I work with, we have conversations over many years, and then it ends in a very big partnership. So it's very, very difficult to answer that question.
Well, marketing and word of mouth starts here, Eloise. So everybody listening here, share.
Thanks, Graham. Thank you.
Thank you. And we'll be looking out for the resilience measurement tool later this year when it goes out there. I'll be happy to, start using it.
Thank you so much. I think the only other thing I would add to that, Yetunde, is just going back to Jenny's point is, I worked in the credit union system myself for many, many years. And I do believe that there's enormous potential of credit unions and other organizations partnering to support people at scale. And so I think we need to think less about the marketing costs and the opportunities for our individual organizations, and think really strategically around how can we partner and drive positive impact together, because that's really the way forward.
Thank you very much. And thank you to all our panelists for the conversation and our audience. Been nice sharing the stage with everyone.
Thank you so much.
Thank you.
Thanks, everyone.
Great moderating. Thank you.
Bye.
Well done.